Could this be the end of the IRS? This week on the Extreme Personal Finance Show. Hey, welcome to episode 40 of the Personal
40.
Finance Show.
Holy cow.
I know, right? My name is Chris, and joining me is Dan. How you doing, buddy?
Howdy, howdy. Good. Other than feeling like the mic is going to attack me.
It's all good, dude. You
But as
sound
long
great.
as it sounds better, then that's fine.
That's right. That's right.
I'll get used to it.
Yep. Um, yeah, man, today's kind of a crazy day.
A little
It's
bit.
it's a crazy day. I woke up to some crazy news, and it's been in all the headlines all day long
Of course.
that
Yeah. One headline in particular, I'm interrupting because
oh, go ahead.
you're doing this because I asked to. Main topic for today was not about the markets, but I saw a headline 30 minutes ago, 40 minutes ago. NVIDIA sheds $589 billion, making largest loss in stock market history, especially that last part. Largest loss in stock market history. It's like, dollar wise, sure, but there's so much more that goes into things that there's like that by itself makes someone go, oh my goodness.
Right.
And so, okay, rewind a little bit. The next little bit here, none of what we talk about is financial advice or investment advice
That's right.
necessarily. It could be a little bit of common sense advice and behavioral advice, but it is definitely not investment advice. It's food for thought, right?
Yeah.
So NVIDIA down 17% today because of DeepSeek from China getting
hmm
some headlines about AI and they're doing it cheaper and all of a sudden, oh no. So NVIDIA tanks 17 something percent, right? I'm assuming that's the headline that you're talking about is just like, oh yeah,
Yeah,
market noise.
exactly. Yeah,
Right.
Nvidia plummets, and among some others. But what grabbed my attention in the headline was, and what I in the headline that I saw was 17.5%. I suppose it could have came back, but it was 17.5%. It was 615 billion.
Yeah. Okay.
And
But
what grabbed my attention was the fact that it lost more value than Delta, Nike, FedEx, Marriott, CVS, Hershey's, Kraft, Heinz, and Chipotle combined.
sure. How
Like
many was that?
what?
Nine?
Yeah, right? Yeah.
Any random nine companies? You can make it more random and get up to like 50 companies if you want to.
I thought, especially when you look at like Delta and Nike, like wow, it's hard to believe that the market cap of Nvidia was so high.
Yeah. I mean, and it's true, but so that's part of why I want to mention it. It's like,
Yeah.
okay, yes, it lost quotation marks, it
hmm
lost that much valuation because it was so high valuable, right? So the going back to the percentage aspect. Now, anybody losing on a paper loss in one day of 70%, that is big for
hmm
sure. Not trying to say that it's not. However, the market overall, and by the market in this case, I'm specifically talking about the S&P 500. You know,
hmm
there's various markets, but that's the one I'm referring to. Was down 1.5% today. So, how many companies must have had actually a pretty good day if Nvidia could be down 17 and the market overall
Right.
is 1.5, right?
Well, you had a great rebuttal to me because I texted you saying, should we go buy the dip? And you said,
Right.
well, the market's still higher than it was
On January 1st.
January 1st, right?
Yeah. The market overall is like, you know, if you really thought that Nvidia was worth what it was worth yesterday, then buying it at 17%. But that's where you can't play that game, right? Because okay, parallel. Back 2020, Tesla in August somewhere in one day was down 21%. So its market cap at the time wasn't as high as Nvidia. So the overall dollar loss of what that was lower, right?
hmm
But percentage wise, it was worse on that day. And since then, it's up about 150%. So, meh, big deal in retrospect, right? Again, Not saying that everybody needs to go out and buy Tesla or NVIDIA or
Hmm.
whatever, but these single day movements shouldn't be something that's influencing what your overall investment plan is.
Right.
Especially because hopefully you're not all in on one tech stock that's
Right.
taken off in the last year. In which case, you look at your portfolio and you're down a percent and a half. It's like, oh, okay, that happens.
Right. Well, and that's so again, it's kind of like what we have said in the past too. That's why it could be a good idea to invest in those index funds that give you many different stocks that can help cushion that blow. And you know what? When you have those index funds, so if someone's new, you know what? You may have some NVIDIA and some Apple and some of the other ones that we talked about, right?
Right.
So that's just the way I think about it. But
Yeah, for sure. Uh, Before we move on to
mhm.
the main topic of the day, a few other things I thought interesting. Everyone in the U.S. hates the idea of investing internationally, but international, every place other than the U.S. today was only down 0.5%. So hey, there's that.
There's
And
there. Yeah.
then something I heard a month or so ago, toward the end of 2024. Now, it actually is very appropriate to talk about it now that NVIDIA had a big down day, right? So for 2024, Europe, the Europe equivalent of the total US market, right?
Hmm.
If you took the total US market and then pulled out NVIDIA, that one stock, the European market did better than the US market.
Hmm.
The US market was just through the roof in comparison because of NVIDIA. So who's to say what the next 5, 10 years plus will really hold?
Right. Well,
So,
and if speaking of that, I mean, NVIDIA themselves, that they were on just a rip for a decade. I mean, they're up 28,000% in the last 10 years.
well,
So
how much of that was last year though?
you never know.
I
Yeah,
didn't look that up,
yeah,
but
I didn't look that up either.
I'm going to look that up later. We'll put it in a show note or something.
Yeah, right. But yeah, I mean, it grabs the headlines, and that's why we kind of spread it out over. And I just wonder, I mean, I know that there are, some of those stock bros that lost a bunch today.
Oh, for sure.
Well, yeah, let's go ahead and look at. I'm really curious because I wanted to talk this over with you, just talking about, not really specifically about the Fair Tax Act and now being updated, the Fair Tax Act of 2025. It could be.
I was going to say, I think it's like Fair Tax Act 4.0 or something
Yeah,
at this
right.
point, maybe more.
Well, and so how I came across this was really like, I kind of want to see like if there any big changes that I need to know about or something that I need to talk to my tax guy about. You and I talked about too, like, you do your own taxes. Ever since my dad passed away and things got super complicated, I started to go to my tax guy
Mhm.
because I had to do his estate and his taxes. It was kind of crazy. I had to file my dad's taxes after he had passed. Like it was just weird. So anyway, I was doing some research trying to find, okay, what are some big things? And it said, well, hey, now that the new administration is in place, we could be looking at some changes. And it pointed to some of the changes that would go into effect if this Fair Tax Act gets passed, which is crazy because I started looking at, well, what exactly is this and what are some of the key things? And one of the first things that it talks about, I think it grabs headlines. I was
Mhm.
guilty of that when I said, is this the end of the IRS? But like, because it actually states in there that they would basically abolish the IRS. Like it would be gone. Not that the government wouldn't be getting their money.
Right. Yeah.
It
Just,
and it what makes it crazy for me is that it would add something called like a single national sales tax. And
mhm.
that's how the government would be getting their money. And basically they would add Depends on what report. Like I just did some research just before we started recording so I can get the accurate numbers. Some things say 23%, some say it'll be around 30%, but it would add like 23 to 30% on top of all of the things that we purchase.
So it's
Bas-
basically like a high sales tax,
That's right. They're calling it a consumption tax.
consumption tax.
Yep, this national consumption tax. Then you and I wouldn't have to file our income tax every year, or it would be a lot simpler when we do, right? There wouldn't
Sure.
be this progressive tax bracket thing, and it would be a lot simpler.
Yeah, for sure. I think of all the arguments against it, perhaps I don't think you can argue that it would be simpler for the taxpayer,
I just feel as
whether it
though,
be better or not, but it's
right,
simpler for sure.
I just feel as though it would be such a pinch for those people in the middle, in the lower or
Hmm.
middle income, because you're already, kind of, I don't want to say scraping by, but you're living paycheck to paycheck, you're trying to save, and now all of a sudden, I mean, we were talking about some of the inflation earlier. Well, imagine, you go buy your necessities and buy your groceries and buy those things that are now 30% more. Now, but keep in mind, I guess one thing to consider, you wouldn't have those payroll deductions though,
Right.
right? So your
And that's,
paycheck may be bigger.
yeah. So from what I looked into it, and correct me if you've seen something different, is that this would also include, as far as those deductions from your paycheck, would also include what's currently called the FICA tax,
Correct.
right? So all of the Medicare, Social Security would also be funded from that 23, 30%, whatever tax that would be,
That's right. That's right.
correct? So,
That that consumption tax breaks down like this. About 64% of that would go general revenue. So that's like infrastructure stuff, education stuff, public services like FEMA, FBI, all that stuff.
mhm.
Some defense stuff, military stuff. 27% would go to support the older population, like disability, trust funds, some survivor insurance stuff, like for retirees and disabled people that are getting disability from Social Security. And then about 7% of that's captured from that consumption tax would go to like Medicare programs, hospital insurance, the Medicare Part B, Part A, and then other federal medical like insurance systems like Medicaid for children and stuff like that. So that's kind of how, to your point, from that money would go to fund the Social Security as well.
All right. Okay. So given that, and
Mhm.
let's assume for the sake of discussion that is 100% correct. If we're off, whatever. We don't need to
Yep.
figure that out right now.
We're just talking, dude.
Right. So something that I don't think people would consider is that impact of FICA on your paycheck, right? So let's say you're lower middle income, right? Well, FICA, if you're employed, not self-employed, is going to be just a little bit over 7.5%
Hmm.
tax. It's like 7.65, right? So if your effective tax rate, and you can go back a couple episodes and hear about the difference between effective and marginal tax rates. But so if your effective tax rate's 7.5% also, so you're over 15% tax just from income. Now add in your state tax. Now your state tax is going to be between 3 and 5%, higher than that in some states, right? But so you're getting close to 20% anyway on your income tax when FICA, federal, state is all involved. Now you add in your 5 to 8% sales tax that we have currently,
Hmm.
and then you're at 20% anyway, 22%. So even for people who are the lower income threshold, is it now granted there are people who effectively pay zero tax because once you add in the standard deduction, they don't pay anything. I
Hmm.
get it. And that would be something to figure out how do we make sure those people don't get completely obliterated, right?
Right.
But generally speaking, it's the idea that it completely is over taxes. I think the people who are lower income, lower middle class is not it could be true, but I don't think it's as wide a gap between the two as it gets made out to be by people who oppose it.
Hmm.
I think probably close enough that it's worth having a discussion rather than just having a partisan yes, no, whatever. An area where it then comes in to be, well, this isn't fair on people who make less is because of it. It's considered a regressive tax, right? So if you make a whole lot more money, you have more disposable income. So even if you're buying a lot, you have a lot of money left over, right? Not all of your money is going to consumption.
Hmm.
And while that's probably generally true, another thing that I don't think it takes into consideration is we see this all the time. If you are in finance circles, you can't help but see it quite often. Couple makes $500,000 a year, can't make ends meet,
Right.
right? It's like there are plenty of people who are making really high incomes
Yeah.
that are also spending all of their money.
Right. You remember when
So
I sent you last week? I think it was a Ramsey
like,
show.
yeah, $600,000 a year and living paycheck to paycheck. And
I was like, what?
there's a lot of that. I won't go so far as to say that it's the norm. I don't
Hmm.
know one way or the other,
Right.
but there are plenty of people who are earning a really high income and paying probably on average 25-30%
Hmm.
tax rate, and then also spending a whole lot of money. So not everyone who makes a lot of money is saving a lot of money. So that's something to consider. But then also, we hear often, the ultra wealthy that have all these ways of access to capital so that they don't have to pay taxes. So they take lines of credit on equity that they have, whether it's a business or a home, or they take a margin loan on their stock portfolio or whatnot. And so these are all these ways that these people have access to capital, access to money that is not taxed as income.
Right.
But now, I shouldn't say now, if that were to go through,
Right.
and all these purchases that they might be using those different avenues of funding are going to be taxed.
Yeah. Well,
So
I was going to bring that up. I was going to say, not only those people that are using those,
methods,
yeah, those methods, um, but also think of all the people that just don't pay taxes. They don't file and they wait and they wait and they wait. Well, now, I mean, is this a way that the government can recoup? Well, it could be, I guess, more up to date and receiving those funds that they may not, or they may not get those funds for years in the future when they actually, you know, track them down and they,
right? Which I think to that point is one of the reasons why I think if nothing else, I'm not holding my breath for something like this to happen. And I'm not really, for my personal situation, I'm not worried if it happens or doesn't happen. I'll
Mhm.
figure it out. I don't think it's going to be the end of a way for people to figure out how to have a good financial life
Right.
and end up wealthy. I don't think it would do that. But that being said, I'm not holding my breath on it happening because of so much business that is out there that is all around people filing taxes.
Mhm.
So you've got all the tax preparers, you have all the H&R Blocks, you have all the Jackson Hewitts, you have all of these companies that do not want it to be easier for you
So
to
they're
do
going
your
to lobby
taxes.
to make it not happen. I mean, they're already
Yeah.
pissed about the free file for federal.
Yeah. And then you add in just so I know people who work in tax, not well, mitigation. So you haven't paid your taxes, like you
Yep.
mentioned before. You haven't done it in numerous years, and now you're way behind. And they work with people to then work with the IRS to get caught back up, right?
Mhm.
And so they can get on the back in the black and make good progress going forward. Well, anybody who has that kind of business it would be impacted.
Right.
So I just, I mean, I just don't see it happening.
Right. Did I tell you about the buddy of mine that like one of his first jobs out of college was for the IRS, and he would go track these people down that he owed money, back taxes. And it was funny. The whole conversation was the fact that, it was the first job out of college. He's making like $27,000 a year or something,
Hmm.
but he was collecting millions of dollars for the IRS, right? And he told me this crazy story. I was like, dude, you got to have some crazy story. And he's like, yeah, some of the places he would go to like collect money when they'd audit someone, he'd have to go and try to get money, blah blah blah. And some of the places were just shady, like just like crack houses and stuff. And one time there was someone, like it was like a festival, like a carnival, like a theme park kind of thing, right?
Okay.
And they had like carnival rides. And the scrambler ride.
Maybe.
Anyway, so this carny that's like running the scrambler ride, he like went to him and said, "Hey, you owe $400,000 in back taxes. Either you pay us $400,000 or we're going to repossess your scrambler ride." And literally the guy wrote him a check for $400,000.
Oh, jeez.
I know,
That's, I would not have guessed that somebody that works that
right?
has that kind of money.
It's crazy. I don't know if I asked him,
And
did
the
it
check
bounce?
bounced.
He's like, ah,
Right.
that was beyond me. So
That's
anyway,
somebody else's problem.
yeah.
Huh.
So I don't know what you got on a tangent. Sorry. Like every week we go off on a tangent.
It's all good.
But yeah, I think one of the big things about this is I'm just curious of, like you said, regardless of what actually happens, you'll kind of roll with it, you'll adapt. I just think, would they rather continue to file their own income tax? I think you really hit it though. I mean, I think the private tax preparer community or whatever, they
Hmm.
would really lobby hard to not make this happen,
Oh, I'm sure. I'm
because
sure.
then
And
their
then,
business, half their business would go away.
yeah, and probably a lot of accountants,
Yeah.
help not just individuals, but also it'd be interesting to see how that would affect um, businesses too, as far as corporate taxes
Hmm.
and revenues and
Oh, that's
whatnot.
that's
And
true. Well, there's like a million pages in the document at congress.gov, but I
right.
don't,
Yeah.
but
So
I'm
I
not,
mean, so what is it? Is it just like the things that corporations buy is just taxed at the same rate, and it's just that is what it is?
that's a great
I
question.
don't know. It's even more interesting. So what was going through my, maybe it's less interesting. I don't know. More interesting to me. Um, we were talking about FICA tax before.
Hmm.
Now, okay, cynic in me says if it's just all done through this consumption tax, right?
Hmm.
Well, so there's an employer side of that too. You're paying 7.65%. Your employer is paying 7.65%. If they don't have to pay that anymore, okay, the cynic says, oh, well, now their profits are going to go up because they're not having to pay that.
Interesting.
The optimist says, well, it won't take too long for some people to be like, hey, wait a minute. You used to be paying almost 10% of my FICA tax. So shouldn't some of that just be rolling over to me as a as income boost, as a raise,
Yeah.
basically?
Right.
So, whether a company will do that or not is who knows. They'd probably try to do as little as possible, but a smart employee could be like, let's talk about this, right? And that would also be something that small business owners would be able to think about too, is that I'm having to pay 15% of self-employment tax, which is basically just both halves of the FICA tax, right? Well, now you don't. So now your revenues just went up that much.
Right.
And if you're not a big spender, if you're a saver and you have a small business, that's a huge impact.
Totally.
So interesting to think about.
It does say that it would simplify a lot of the tax compliance for not only personal but business. So it eliminates the need for like annual filings, deductions, the credits,
Hmm.
estimated tax filing, all of the stuff that small businesses do today. So that's one piece that I did pull out here. It's
Right.
interesting to see what happened, and I wanted to have a conversation about it. So
Yeah, it'll be interesting for sure. We shall see.
right on. Well, hey, thanks again, everyone, for listening to this week's episode of the Extreme Personal Finance Show. Please feel free to like, subscribe, follow, and share
Four things.
for things. And leave a review wherever you get your podcasts.
Five things.
We really do appreciate it. And we will see you next time on the Extreme Personal Finance Show. See ya.